Good day, everyone. This is James Bennett, a global equity analyst at Anchor Capital. A quick discussion today on Hermès's recent Q4 24 financial results. If we just look at how the share prices have done year to date this year, Hermès has done pretty well, up almost 20% in US dollars. Ferrari at 14% has done pretty well too. Excellent results. There's no other way to describe them. And in fact, considering how luxury companies have been generally struggling at the moment, besides Ferrari, which is also doing well, when the numbers came out at 17.6% year-on-year growth in Q4 in constant currency for their sales, it was incredibly strong. So, consensus had been looking for only 11%. The buy side whisper number was maybe about 15%. So you almost initially, when the numbers came out, you thought maybe there was a mistake in something you were reading. And even Asia Pacific ex-Japan, which includes, mostly China in that number, grew at about 9% year on year in Q4. Consensus had only been looking for about 1.5%. So although the other countries in that number probably also surprised on the upside, it's likely that China in itself was probably positive year on year in Q4. It's always interesting to do the comparison between Hermès and LVMH. And there's no doubt, if you just look at the last 4 quarters, the huge operational gap between these two companies. So just in Q4, for example, where Hermès grew 17.6% year on year, LVMH only grew 1% year on year, with its more exposure to the aspirational luxury end of the market. Obviously, the market's not silly. It's well aware of this, and it values the two companies, accordingly. So where LVMH sits at a 22 PE to December 2026, Hermès sits at about 49 times. So a phenomenal business, executing extremely well, outperforming most of the competition, but also valued accordingly as well. Over time, Hermès's China exposure has grown materially. It's probably started to decline on a percentage basis a little bit over the last couple of years. So for the whole of 2024, Asia ex-Japan declined slightly to about 44% of Hermès's sales. And in fact, if you just break out Q4 24, it was actually down at about 39%. And this is one of the big differences between Hermès and Ferrari, is if you just compare Q4 last year, Hermès still has significant China exposure. If we strip out the other smaller countries in that number, probably China is about 30% of their sales, whereas Ferrari is sitting at just over 5%. So two fantastic companies, but very, very differently positioned at the moment in terms of their China exposure. Leather goods remains, the overwhelming driver of Hermès's revenue. And then the second one is ready to wear. Now, remember that that's not fashion items that come and go, but it's very sort of conservative luxury end type of exposure, which has proven to be, pretty defensive. Just bear in mind, too, that last year, Hermès hiked their prices by about 9% in early 2024. They haven't hiked their prices as much as some of the other luxury companies. And although they don't really make these numbers too public, it appears as though prices may have been hiked another 6 to 7% in 2025. Volumes likely to grow at 6 or 7% again this year. So, it seems quite likely that Hermès could report another 15% top line growth in 2025. Phenomenal businesses, looking at the return on capital employed consistently between 30 and 40%, other than for the COVID year, where it understandably dipped a little bit, and then a very strong balance sheet with net cash at a new record of about 12 billion euros at the end of 2024. And that's about 4% of their current market cap. Hermès and Ferrari, top of the pile in terms of the ultra luxury exposure. Hermès has always traded at a premium to Ferrari. And actually last year, for the first time ever, temporarily, Ferrari actually went to a little bit of a premium relative to Hermès, but Hermès has re-established that premium recently again. So great business, very highly rated though. This is an exercise I do where I look at what sustainable cash flow growth rate is implied by the current share prices of just an assortment of companies. So in other words, the Hermès share price today is already pricing in a sustainable growth rate in their free cash flow of about 22% per annum for the next 10 years. And remember, this company's grown earnings at close to 20% per annum for the last 20 years. So a great business, but the market has implied that growth rate has been sustainable going forward. So there is some valuation risk here. And then if we look at the breakdown of our NPV for Hermès, it's worth noting that 72% of our NPV comes from year 11 to year 30. So, it is a very long dated, type of company in terms of what's priced in. Phenomenal business, probably a great company to own for the long term. Possibly the valuations just keeping a lot of people on the sidelines for now. Thank you very much.